I got some comments in other videos asking to give my thoughts on RealVision and Raoul Pal and his recent thoughts and investment decisions surrounding Bitcoin. And honestly, my opinion on RealVision and my opinion on Bitcoin has changed throughout learning a little bit more on what he thinks about it. Now, one thing to be aware of is that in a lot of these communications, the guys from RealVision are promoting RealVision Crypto, which is their own crypto media page where they share information and thoughts about different digital currencies. And you can pay for subscriptions and memberships to RealVision and I think RealVision Crypto on their website. So they're selling a service here. Be aware of any opinions that someone is sharing with you whenever they're promoting something in relation to that opinion, because it's not likely that you're getting an unbiased opinion. They just have a motive to make you believe something. It will benefit them from a business perspective. So you just want to be aware of those things when you start listening or consuming any information. Early on in one of the videos, Raoul says that Bitcoin might be the lifeboat of our current financial system once that system comes to an end. Just stop and think about that statement for a moment. He thinks there's going to be a really major system change coming up here. One of the facts there being that many central banks are now pursuing their own forms of digital currencies. Part of the reason for their pursuit of this is because a lot of the global financial system is based around the US dollar, and the US dollar, for some reasons that he mentions, is becoming non-fungible between nation to nation. His position there is based on some economic and foreign currency exchange rate logic that didn't make a ton of sense to me, to be honest with you, but the general idea there was that about 25% of the globe's GDP is produced in US dollars, but about 75% of the global transactions are denominated in US dollars, and that's creating an issue for central banks. He says that the Federal Reserve can no longer accommodate international companies who have borrowed in US dollars because there's more dollars moving around internationally than there are dollars getting generated over there. So because of this, some dollars are becoming non-fungible when international companies try to bring money back to our Fed or our Treasury and bonds or whatever else. Then he made a really interesting point and answered a question that I've had in my own mind for a while, which is how are cryptocurrencies different than the current online banking system where money is basically just ones and zeros in a computer program anyway. Most of it's just done via online transfers. If central banks were able to create their own digital currencies, rather than working through a bank to get funds, individuals would work directly with those central banks like the Fed to get their digital currency. This would allow for easy cross-border transfers, and it would effectively eliminate the wire transfer system and the SWIFT or ACH banking systems. And the existence of the virus in 2020 and still here in 2021 has just accelerated all of those trends for people wanting to be able to make these electronic transactions. And these movements of US dollars through a lot of these electronic transactions, he says, is the backbone of the US dollar. And so if these transactions started to go away, then you could see the value of the US dollar effectively go to zero. Again, think about what he's talking about here. The global financial system would be coming to an end as we know it and shifting to something new. Raoul does acknowledge that all of these things could be a way to fix our current problems like the inefficiencies with the banking systems for now, but it would also bring along a massive structural shift in how macroeconomics even works. Inflation would work differently because there'd be a fixed amount of currency, there'd be no more foreign currency exchange, interest and taxes would be working differently because every individual transaction would be taxed rather than paying taxes at the end of the year. So everything you know about macroeconomics and the equations therein, all those variables would be gone and it would just all be moved to one new currency. But his concern is that this massive structural shift will have some unintended consequences as well. We'll be giving up all our freedoms because every transaction will now be able to be tracked. There won't be any more cash or below the table transactions, anything like that. He thinks the IMF is already talking about something that is on its way to becoming a sort of global debt jubilee or just a single global currency solution. And when there are no longer dislocations in international currencies, it would destroy the fiat system, which is another reason why the US dollar can no longer exist. And when there's no more fiat system, he is led to believe that Bitcoin and gold will be the only safe havens. In a lot of episodes of RealVision, they say many times that Bitcoin is a safe haven. I think that is a ludicrous statement to make given the mathematical standard deviation that the price of Bitcoin has. I understand the argument. If the entire global financial system collapses and ceases to exist and everything goes to the Bitcoin, then of course you're going to need Bitcoin to make transactions. Bitcoin will be a necessity at that point. But that's a different thing than saying safe haven. It is not a store of value. They say that many times. It's a store of value. The value is fluctuating wildly on this thing on a day-to-day, hour-to-hour basis. It's just, in my opinion, irresponsible to say that something that could halve itself in price and then double itself in price within months could be a store of value or a safe haven financial instrument. A better way to do this might just be to say that it's going to be a necessary asset in the future, rather than saying it is a safe haven today, which it just is not. In another instance, Raoul starts ranting about how really low interest rates and really high stock prices and people using 401k plans to automatically save into either buying stock prices automatically each month, buying high stock prices, or buying low interest yielding bonds just feels wrong. The way he spoke about this issue of low interest rates and high stock prices was pretty concerning to me. It showed that he's feeling very emotional about all this, the current financial markets, where prices are, what bonds are yielding, what that means for people investing 10 years from now who have to be fixed income investors. And I get it, none of those things are easy. I deal with those same questions on a day-to-day basis with clients. But making broad blanket statements and specific decisions based on emotions is never the most effective way to come to the best solutions. So when he talked about how bad he feels about people having to buy low interest rate bonds or expensive stocks, it really started to make me think that he has a lot of negative emotions that he's fostering around current financial markets, and that could certainly be influencing his feelings towards the current financial system, namely that he thinks it's going to go away completely. When discussing Bitcoin later, some of the guys on RealVision use the term the most pristine reserve asset. Again, that's ludicrous. It might be a future necessity, but it is not a reserve asset today by any stretch of anyone's imagination. It has a fixed supply, right? And demand is increasing. So in the future, the price could probably be higher. And certainly if it was used globally, which I think in some way it will be, then the price would be even further yet because there would be a higher demand for it. I get all that. It's not a treasury bond though. You can't make public statements to retail investors and people who may be less familiar with what the actual reserve assets out there are, who would for some reason make a financial decision based on what you're saying with some money that they have that they need to make a safe investment into to buy Bitcoin. It's an irresponsible move right now. He does go into the fact that Bitcoin holds more risk than gold, but not for the reasons that I would like to hear. I'd rather hear him say like, yes, it has a really high standard deviation, the price goes crazy, so this is a riskier asset than gold. Rather, they end up talking about things like how if everything went down, like there was no more electricity and whatever, then gold could be more valuable. Governments probably won't try to outlaw gold as much as they will with Bitcoin. That makes gold a little more bulletproof. So again, these are all really abstract political and macroeconomic views that have no basis in reality today. They could in the future. I'm not sure if they will or not, but they have no basis in reality today. And he's saying that those impact the relative risk that Bitcoin has to gold today. I just don't think that's a logical way to look at this right now. With all this being said, Raoul Pal was very convincing, and he certainly convinced me of a lot of the things he said in the video. I know I've been critical of him and RealVision so far here. I've picked out some of the more, in my opinion, ridiculous things that they've said, but they also made some not so crazy claims, some more straightforward claims. I think a lot of those made a lot of sense. And even with some of these more crazy claims, it made me think about what types of massive shifts could potentially occur. So to be honest with all of you, I was already moderately bullish on Bitcoin. I'm not buying any right now. I'd like to see the price come down a lot before I do it. And I think it will, because it's always going way up and then way down if you look at its track record over the last 10 years. But after learning more and more about the RealVision group and their opinion on this, I am more bullish. I think I want to buy Bitcoin more than I used to want to. My complaints with them remain though, because I don't want to buy it because I feel like it's a reserve asset or a safe haven. I want to buy it because I think it could play an important role in the future, but I recognize that it's speculative. They almost never admitted that this was a really speculative theory that they hold. It has no basis in current reality. So that's why I'm picking on them a bit here and saying that they were pretty irresponsible in a lot of the statements they made. The US dollar is going to die and Bitcoin is going to take over. I mean, it's a possibility, right? Anyone who knows anything about probability knows that there's not a 0% probability of that happening, but it's not 100%. And to say something's a safe haven, you'd want a 99 or 100% probability. Thanks to everyone who stuck around to the end of the video here. If you want to support me on any third parties, check out the links in the description down below. I always appreciate the long watch times on these. You know, the YouTube algorithm loves those. If you could also like this video and subscribe to the channel, both of those things also help me out and I appreciate them too. As always, thanks for watching.